Well, thank you, Richard. It's over to you now. Please do submit your questions. We would love to hear your initial views in relation to what's been proposed and any questions that you have for us today. We have a couple of questions that have already come in, so thank you very much. And the first one is, how much of this has already been decided, and will the SRA be listening to the views expressed in this consultation? I will let Richard come into this, but from my point of view, I would say nothing has been decided. This is a live consultation which does not end until 28th of February, and we will be listening to all stakeholder interests, including the profession, and we will make sure that we will consider all the feedback that we've got in order for us to finally make our kind of policy proposal to the board and to inform the decision making. So what I would say is, please do give us your feedback, because it is open and we genuinely would welcome your comments and your views. Richard?
I think all I would add is that, having had to take responsibility for this, it's actually quite a complex issue. And we have a wide range of stakeholders with an interest in it. Obviously, our starting point is to make sure we've got arrangements in place that operate in the public interest and provide protection to consumers. But we have to consider, in the terms of the consultation, what the impact on the market will be and how the various players may react. So it's important that we try to look at the views coming from insurers, from solicitors, from the representative bodies, and certainly from some of the major consumers of services, such as the lenders themselves. So we need as wide a range of information as we can get through this consultation. Moving on to a second question that we've got. What consultation has been undertaken with the lenders as to their likely approach? We have talked to the lenders as part of the external stakeholder reference group. I think the sort of early indications at that stage were that if we moved to a situation where we permitted exclusion for effectively lender cover, the immediate reaction would be that lenders would insist that they only worked with firms who did have the appropriate PII cover in place. But the response of the lenders is going to be very important to us in making these final decisions. We will be meeting the Council of Mortgage Lenders and some of their member organisations during the course of the consultation, so that we can listen in detail to what they have to say, and then of course we'll be considering in detail the response that we get from them. I've got one comment here, which isn't a question really, which is that doing away with the single renewal date would be most welcome. So I think that's a positive response to that particular issue. One question that we've got in here is that insurers already know if we were doing work for lenders or not, but the premium still rockets. Good small firms are being driven out of business, including those who do no conveyancing, and large city firms should set up a fund to save the small firms. Well, I'm not sure that I'm really in a position to comment on the last issue, but in terms of the whether or not insurers know that firms are doing work for lenders, one of the things that Charles River felt was that, yes, the insurers ask for information on the proposal forms about what kinds of work you're doing, do you do conveyancing work, how much of it do you do? But firms are able to change their mix of work during the course of the year, and what you have to remember is that the minimum terms mean that insurers are on risk for conveyancing work, really whether or not solicitors have indicated that on their proposal forms, because you'll also recall that solicitors remain on cover even if there's been misrepresentation in those proposal forms. So Charles River's view, which is, and it's one that at this stage, subject to consultation, we agree with, is that by specifically permitting the exclusion of cover for financial institutions, those firms who do not do conveyancing work will be able to signal much more clearly that they're not doing that work, and the insurers will be able to set the premiums appropriately. I've got another question here, and that is, some of you will have seen reports of a conference held at the ABI last week, where the Law Society expressed some concerns about these proposals. particularly in respect of financial institutions, and someone has asked whether or not we can proceed with these proposals if the Law Society is opposed to them. Well, the Law Society's views will be important to us as a sort of key external stakeholder. They are the leading representative of the profession, and what the Law Society has to say, as I say, will be important in the consultation process. But it's also important to remember that we now have a split responsibility where the SRA has to act in the public interest to regulate the profession, and the Law Society is now the representative organisation. So we will have dialogue with the Law Society. We will carefully consider what they have to say, but we will need to balance those views against the other views coming in, and the SRA board will take its decision in the light of all the responses that we receive.
Okay, thank you, Richard. Before we take any further questions, are there any callers waiting?
Thank you. If you do wish to ask a question over the telephone, please press star 1 now and wait for your name to be announced. If you wish to cancel your request, please press the hash key. Once again, that's star 1 on your telephone keypad. Yes, you do have a question and comment from Claire Wilson.
Hello, Claire.
Please ask your question.
Sorry?
Please go ahead.
Thank you. Some mortgage lenders refuse to have sole practitioners on their panels. Is there any way that the insurance review can help that?
I'm not sure that there is. Clearly, there is a major issue for the profession at the moment about lenders' panels, the attitude taken by lenders to particular types of firm. And I know that the Law Society is spending a lot of time working with the Council for Mortgage Lenders on this issue and has launched its conveyancing quality scheme as, I think, part of that dialogue. But I don't think necessarily the changes to the insurance market will put additional pressure on lenders to put people onto panels. What I can see, though, is some people have painted a picture that the insurers will effectively use this as an excuse not to insure people to do conveyancing. From the conversations I've had so far with the insurers, I don't believe that's likely to be the case. I think the insurers will continue to do what they've done up till now, which is to look at quite closely at sort of previous claims records and the overall risk profile of the firm before deciding what sort of insurance to put into place or agree to. But certainly the conversations I've had so far with the Law Society in trying to get their views back on the consultation, I've no doubt that part of their response will be around how do these changes play into the wider changes going on with lenders and panels and the operation of the conveyancing market. So that combination of factors is something that we will need to consider in responding and deciding where we're going to go at the end of the consultation. So I think that's probably the best answer I can give to that at the moment.
Your next question comes from Jeremy Hirschhorn. Please ask your question.
Good afternoon. The question I'd like to ask you is, when it comes to the renewal in October, would it be possible, or is it proposed that one could renew for less than the 12 months, or even more, on the basis that one could then, within that period of time, look for other insurance? And the second part of the question is, if that is the case, will there be, if you are cancelling a policy before the termination, is it proposed that then one would be able to get a refund from the existing insurers?
Certainly we would expect people to be able to take out insurance for different periods. So, yeah, if it suited you to take out insurance for 6 months and the insurer is prepared to do that, or you wanted to take out an 18-month policy or some other period, the new arrangements would allow that. And we would expect to see that happening, for example, if people wanted to start lining up insurance periods with their own individual financial years.
Yes.
In terms of cancellation, I think it's unlikely that we will have any specific rules which govern that. I think the issue of whether you take out insurance and then cancel it is going to be much more an issue for the individual insurance contract that you've taken out with that particular insurer. So I think that's something that you need to talk to your broker or insurer about when you take cover out.
Fine. Thank you very much.
Okay, thank you for the question.
Your next question comes from Ritsa Moja Amason. Please go ahead.
Yeah, good afternoon.
Good afternoon.
Yeah. The first one is a request. I participated in the Charles Rivers survey, and I would have expected that a copy of the report be sent to me. But I'm just hearing from you that they've presented the report. I don't know, is it possible for me to get a copy of their report?
I think that the Charles River report, which we published, you can link through to it from our website, or certainly you can get a copy from the Charles River website, or if you want to email either myself or Marinisa at the SRA, we can let you have a copy, certainly.
That's okay. I will send an email to Marinisa later.
Okay.
Now, my question is, part of the presentation is that in the initial quality impact assessment that the reduction in the ARP period from 6 months, 12 months to 6 months will not have much negative impact on BME firms. I was just wondering how that conclusion was arrived at.
Okay. Can I just say, I don't think that's what it says. It says that if we're going to be reducing the length of time from 12 months to 6 months, we feel currently our conclusions that it may have some disproportionate impact. And I think I would welcome some views from you in relation to that. So I think if you look at the initial assessment, it says that we think that it may potentially have disproportionate impact on BME practices and BME individuals.
Okay. Still on that one, the other question on that one is that what does the SRA hope to achieve by reducing the number of periods from 12 months to 6 months? Considering particularly the fact that the purpose of the ARP was meant to be a statement. Now, I did understand from Mr. Collins' presentation that firms in the ARP should take positive steps to prepare themselves to get an open market cover, or in the alternative, they should arrange to have an orderly closure. But the point is, what the SRA think could be achieved within a period of 6 months to either prepare oneself to get open market cover or to prepare oneself for closure?
I think that's a good point. I think it's a key one that we're going to have to look at as part of the response, because it's about getting this balance right, isn't it, of if we are going to keep the ARP as a safety net, there's no point in doing that if firms can't use that time constructively to address the factors that may have resulted in them getting in the ARP. And so it's a judgment about, is 6 months sufficient? Is 12 months too long? And there is no right or wrong answer to that. It's going to be a judgment call that we have to make at the close of consultation. So practical examples and practical views from people on that particular issue, I think, will be incredibly valuable to us.
That's fine. Of course, we're going to submit a formal response to that, particularly under the aegis of the BME, because our view has always been that the problem has never been the ARP. The problem has always been the regulation. Now, our view has always been that every firm should be able to have PI cover. A firm that will not be able to get a cover should not even practice at all, because that means the firm should have some regulatory issues.
Can I just come in? I mean, I know that you have some strong views about it, and we would really welcome those views. You've got my email address. Please email me. I think Richard is absolutely right. No decision has been made on this, and this is one of the areas we are going to be considering quite seriously in relation to impact on BME firms. So, by all means, please do email your views across. And we move on to the next call.
Thank you.